Hello, 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 everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacino. Happy non-farm payroll Friday. Good morning, Patrick. Morning, Dave. Morning, CD. Afternoon, Charles. Good morning, Connor. Christo. Anissa. Donald. Bob was spot on with a 220K read. There you go, Charles. Good morning, Royal Palms. Good morning, Options 22. Yep, technical issues. I'm so sick of technical issues. But we got to still be focused on the market. We had non-farm payrolls come out. Morning, Ken C. Non-farm payrolls. I thought it was sort of a mixed report. Who summed it up here? Good morning. Christo did. I wouldn't call it weird, but mixed. More jobs, but less earnings pay, less hours worked. I didn't think it was that bullish from the set, but immediately people are so they're going to have to change their course, blah, blah, blah. No. Look, this doesn't do anything to change really the Fed's course, although now it's just projected the terminal rate's going to come in at 5%. The market's trading like a little uh, child having a tantrum based off everything. It's this, it's that, it's this, it's that. We're going to have to focus on the long-term picture. Non-farm payrolls actually coming in at 223, a little down from previous, but higher than forecast, so that's still strong. Unemployment rate forecast 3.7, coming in at 3.5. Hourly earnings, this is what the bulls are focused on. And prior was revised lower, but forecast 0.5 coming in at 0.3. So that's where, wage growth is slowing, so inflation's under control. Fed can change course. No, they're not going to change course off this little print. Now, it does help. It does reinforce that aspects of wage inflation are coming down. But this is one lower print with a revision. It's not, it's not zero. It's not 0.1. It's still growing. It's just not growing as fast. Year over year forecast at 5, coming in at 4.6, previous 4.8. So that's showing you, but that's got a little of a base effect in it. Participation rate ticking up. So more people are participating, coming in higher than forecast. So you have more people participating at slightly lower wage growth. So it still points to a strong labor market and the Fed's soft landing aspect. Where else do we sit with this? Next, we have 30 minutes after the open, non-manufacturing PMI still expected lower than previous, but still expected in expansion territory. So that's going to be interesting unless this is a big miss. Or a big beat. If it comes in a consensus, I don't think it's going to look at anything. But look at the subcomponent that's manufacturing unemployment. If you're looking at the numbers at 9, other than that, you have non-manufacturing prices. Will be interesting to see. This is still forecast to come down a little more, and new orders still forecast to come down a bit. Also, now, I don't know if we'll get any comments on non-farm payroll, but we got Cook speaking, Boston speaking, and Barkin speaking, starting at 10:15 Central. And then all the way we have Bostic again at 2:30. So we have a fair amount of Fed speak. We'll see if they mention anything with the payroll numbers, or they just say that's one data point. We still have more data points to come. I mean, I don't see this changing anything yet on their course of action. But I think a lot of people are looking for an excuse to buy off anything that wasn't bad. So you see all the mega caps up besides Tesla, which did drastically slash their prices in China across the board. So let's see if Bob can get on. Let's see. All right, Bob, hold on one second. We have technology leading this bounce up so far. Fed Watch Tool still 71% for the 75 basis. Still right at between fear and neutral mode. Gamma, by the way, if the rally does continue, we'll have to see, but 38.90 roughly is the gamma right before 3900. There's a lot of headwinds overhead. Lots of headwinds overhead, some gamma walls overhead, and just pure price action. So watch if it does start getting above 38.90, you can have dealers selling into the rally. All right. Bob. Hold on. For some reason, you're not assigned properly. There we go. You're assigned properly to... You were stuck in the green room, Bob.
I don't know if this is going to work or how long it's going to work, but I just want to tell you guys that from this particular number, this is pretty much exactly what I hoped for. Not what I was predicting, but what I hoped for, because I'm going to get out of that long position today. And based on the price action, I'm going to get out of it shortly. This is not enough. And I think we'll see that as the Fed speakers continue, that the Fed speakers themselves are going to say that that's not enough of a decline in wages, because wages were only down 1/10. And one of the things they've said is that they need wages to decline, not increase at a slower rate. Now, the increasing at a slower rate does take a little bit of pressure off of the Fed, because as inflation comes down and wages go up, it comes off of the pressure on the consumer, right? Because they start to converge. But it's not enough yet, and it's not enough for the Fed. And that drop in the unemployment rate isn't going to play well for Fed watchers. So that's really all I had. If any of you have any questions, I'm going to get out of this. I heard something really interesting today that I think I might steal. It was from Randall Krosner, who's a University of Chicago guy. He said that some people are starting to think there might be something that he's calling an immaculate disinflation. And you're going to hear me steal that a lot, because I'm working on a new theory for the second quarter. So you guys will be the first to hear it. But I think those of you that want to outperform for the next 2 years, it might work. And I actually might try it within our family in the second quarter, but we'll see. I got to work on it some more. But I'm stealing immaculate disinflation, and I'm going to watch indicators to see if there's actually I'm giving him credit now, Mike, so I'm okay, right?
Yep.
Randall Krosner was the first one I heard say that, but I'm going to steal that. This is recorded, so if I don't give him credit every time, everybody remember that on January, whatever the hell today is, was it 5th or the 6th?
January 6th.
Oh, it's the anniversary of the overthrow of the government, whatever. Anyway, yeah, I'm stealing that because I think if we can actually get something to the effect of what he's referring to, which I don't think so. I'm still in the recession camp. It's really going to be a beautiful thing for tech in like the next 2 years. It's not going to be a short-term theory. Anyway, just can you read what Sterling just wrote about the lowest skilled workers? I think that's interesting.
Wages for the lowest skilled workers have risen more than for high skilled workers over the last 12 months per the Atlanta Fed's wage tracker.
Yeah, I just think that's interesting because services inflation tends to be higher skilled workers. So if services inflation is entrenched and lower wage workers' wages are rising faster, we may not have a dip in inflation medium term. So we'll see how that goes. What else? Anyone? Any questions or Mike?
I mean, my thing is, until it gets out of this range, it's not to get hurt.
Yeah, I wanted to tell you, Mike, I heard came on YouTube because I hadn't let you know that I was going to come on, so I know you wouldn't be looking for me to join. But I heard you say that I don't think this changes the trajectory. I 1,000% agree. 1,000% agree. I'm going to get out of this S&P trade today. So I will not be long after today because I don't necessarily think this rally holds up. But I completely agree with what you said. It doesn't change the trajectory of the Fed, this particular set of numbers. If you were referring to the Fed, I think.
Yeah, I was because it was. I mean, the immediate stuff I got was for the people who wanted to find something for a reason to buy. They found something in the report, but I don't think it changes anything. They're like, "See, they've got a pivot." I'm like, "What? There's no pivot in here. Right. There's no pause yet. They're gonna go 1 to 2 more." And then they're going to pause, and there's no pivot. but it's like people were looking, they're cherry picking what they wanted to find from the report to satisfy what they already wanted to do in the market.
Yeah.
But overall, we're still stuck in a range. What's great
So
though, hey, and from a tech perspective, if hey stuff starts unfolding, you do have a really nice potential double bottom in the Nasdaq. It's a long way off from triggering, but we have a bullish potential pattern, so
yeah.
we can wait. We don't need to say I need to front run this and I'm going to eke an extra 2% out. You know, wait for stuff to unfold. That's what everybody's trying to eke another 1% to 2% out over. Like, oh, I got to grab it today instead of wait for
Yeah.
some patterns to trigger. And I guess I should get aggravated at that. It's just like I want to shake them and say why.
Well, that's you get aggravated because you actually give a shit about people, and that's what drives me crazy about you. I'm almost not your friend because of it. No, I mean you're absolutely right from that perspective, Mikey, because again, the idea that so Gina Martin Adams is she works at Bloomberg Intelligence, and she's like an analyst that works directly from Bloomberg. She's super smart. I disagree with some of her theories right now, but she's really smart. And they created a portfolio at Bloomberg called the MVP portfolio. And Tom Keene, who is absolutely insufferable, he drives me insane. He's completely worthless. Asked her how the portfolio is doing. And she started with her, well, relatively speaking, it's doing, okay, given this and that. But, it is designed as a long-term portfolio. The part of that drove me crazy was the question, how is it doing today? That's a stupid question. That's why Tom Keene is useless. That's a stupid question. How is it doing today? She has a portfolio that she designed, and I'm not saying her portfolio is good or bad. I don't know. This is the first I've heard of it. But it's based on momentum, value, and profitability. Those three things. That's what the MVP stands for. So, and this is something that Mike and we've talked about it in the past, and I want to revisit it again. Creating, you and me creating a technology portfolio based on momentum, price patterns, and profitability, not zombie companies. And it will underperform zombie companies in crazy momentum markets. But over the long term, 2-3 years, it'll do great, I think. Now I just kind of talked about what my thesis is, but I need to talk to Mike about it in private. But it's a stupid question, and it goes to what you said, Mike. What's going on today? Maybe nothing. Maybe nothing. Go to the beach, or Mike, in your case, go lay in the snow. Do something else other than staring at the market saying, I have to get that 1% today. Every move does not belong to you. It doesn't. That's how you get crushed and killed. So on that note, there's a person on Twitter named Penny Lane Blaine, and I kind of bullied, I assume it's a her, but I kind of bullied him or her to subscribe yesterday, Mike, to the Path Trading Partners YouTube. And I don't know what name he or she subscribed under, but I do know that this person needs you, because this person tweeted yesterday, I'm done with options. I'm generally right on my direction, but I get killed with theta, which is time decay for those of you that don't know. And everybody was going on there going, try futures, try this indicator, try the MACD crossover, try this. And I reached out to this person through direct message and said, reading the comments on this is painful. Subscribe to the YouTube. You will never have to buy anything. And listen to Mike. Now, I don't know if he or she is here today. I don't know. But I said, promise me you'll do two things: subscribe to the YouTube and ask questions, and you'll be fine. This person needs you. I don't know if he or she will ever show up here or what name he or she subscribed under. If it's Penny Lane Blaine, it's the same person. That's
right.
it. That's all I got for you guys. Looks like there's a question for me about housing. Business person who I never saw in here before. Maybe that's Penny
They've
Lane
been in
Blaine.
here. I'm afraid. What?
No, it's earlier than that.
Afraid to buy the top. Well, can you share your thoughts on housing? And that was the second. Yeah. I'm afraid to buy at the top.
So I'm going to share something. It's more of a family related thing. So Mike knows who this person is, but I know a person who ended up buying a house because of a default on the house based on interest rates. So new construction here in Florida. They bought the house, they picked their flooring, they picked their cabinets, they did everything to the house, and then they couldn't get a mortgage because rates rose in the period of time that the houses were being built, right? So this person that I know was able to swoop in and save about $114,000, $115,000 versus the original price that the house sold at. So that tells you two things. It tells you that there may be a floor under housing after housing fell quite a bit, which it's already done. Shashi just said, how's the market in Florida? It's falling, and it's falling rapidly, but it may be basing, okay? All of it has to do with interest rates right now and the price of housing, and we may actually never get to a point in time where the housing market is back to oversupplied. We may not get there. We may just get to evenly supplied, but I'm still bearish housing prices. Still very bearish. But there are people that are ready to come in and say, okay, this particular price has now adjusted down enough versus where interest rates are. So I think we're in an area right now where you might see a little bit of basing before the next move lower, because that particular segment of people who are going to buy those reduced houses is small, in my opinion. Anecdotally, it's very small. So I think the housing market still has more to go, but you might be in sort of a basing or pausing period, just like markets that kind of rally up before the next move down. We're in the housing market rotation zone to the downside, if you ask me.
All right. Well, thank you.
Sorry to jump.
We didn't have any technical issues today.
No, this is weird, right?
Well, I reset everything on my end after you left. Yeah, after I finished the live. Well, actually, I got booted out of my own live stream yesterday.
Who's you?
No, I reset everything, and I've switched to backup internet just in case. I'm trying to eliminate any causality.
CA Atlanta Cristo, start going to new construction sites and go into the sales office and say, if you have any defaults, call me, because it's happening. Again, it happened to someone I know personally. Start going to those new housing prices or to those new construction sites. Go to the sales office. Say, if you have anyone that defaults due to mortgages, call me. Because the builders cut those because it's already built, and they lose money every single day that built house does not close. So they want out of those.
All right. All right, Bob. Thank you.
Sorry, buddy.
Thank you. All right. I'm on we're recording the podcast today.
Yeah, right? You're on the podcast.
I'm on the podcast. So just wanted to let you know, everybody, we will probably have a delayed start to this afternoon's because I will be recording the Jim Iorio Futures podcast with Bob and Jim this afternoon. So
that'll be fun. I have a question that's requested. Somebody texted me a question, Mike. What's that? I don't know that it's a question for you. As a matter of fact, I know it's not a question for you. But maybe the three of us, and I'll text this to Jimmy as well. A friend of mine who's a member of all our stuff said, hey, Bob, not sure who your guest is this week, but can you ask them if 90% of sell-side analysts predict a weak first half 2023 and then a rebound second half 2023, can they all be correct? No.
Okay. I was going to say.
We'll do that in the podcast. I'll bring that up again in the podcast.
All right. Well, thank you for joining us, Bob, and I will see you on the podcast recording this afternoon.
Yep, and I'll see the rest of you guys next Tuesday. Don't forget to subscribe to this YouTube channel if you haven't. Don't just show up. Subscribing helps. I'll see you guys.
All right. Thank you, Bob. There we go. Oh, I hope that was about this live stream or the podcast, Options 22. I know trade idea in Jan after dividend stock trade idea. There is not anything. We're caught in a range. We're waiting for some direction. Besides stuff I've already talked about, like Intel, like MO, some other dividend plays, there's just nothing. Sometimes there is nothing to do. And look at this. So far, this is where, all right, we're still caught in this friggin' range, which can happen, which is fine. The market's still trying to figure out a direction, running up into the rotation zone today, coming back down. You take a look at the shorter term. This is a big explosion. Yeah, I'm watching. We could retest some high areas, but remember what I just said. Even on a rally, you got stopping point about 38.80, gamma walls and gamma flips 38.90, price action 38.96. Then you got 39.15, and then you got your major breakdown zone 39.35, and you're you're into positive gamma mode, so dealers are selling in. Even above that, if we rallied. Yeah, if we start getting above that, there could be a quick little play to the 200, but that takes us back to the 50 to 62.5 potential rollover area. So, is there some upside? But would I just randomly be buying today? Would be day trade only and then evaluate on a close. If you're not a day trader, I would not trade. Okay, we got a lot of stocks still below key support. I wish we had more time for this to go over. I'm watching this low area between overnight today and yesterday for the breakdown area. And I'm watching yesterday's highs, which is coming into the rotation zone. But even above that, I'll just be targeting right in front of 3,900 where the 50 is and prior major sellings occurred. The NASDAQ, which is, rallied up, hit the rotation zone again, and the 10,950 level and backing off. Sometimes there's just nothing to do. You got to realize taking no position is a position. Taking no position and staying in cash or keeping your account liquid and saying, I'm waiting for opportunities is a position. You can always park money in short-term instruments now with rates higher also. You don't always have to do anything. That's where people, it's why I hate running a service, and I haven't started one up again because there's some weeks or even months, or there could be a month where there's like literally nothing to do from a longer-term perspective, and everybody's like, I need a trade, I need something, and I'm like, there isn't anything that's really worth putting out there. And some months there might be 10 good setups. Some months there might be 0 good setups, but it's got to come out every 2 weeks or every whatever. I need a setup. Well, if there's not a setup, I can't do anything about it. NASDAQ has a potential bullish setup. NASDAQ is the clearest market right now besides the breakdown of the S&P. Why? You have a double bottom pattern, and we have a major breakdown area, which also would invalidate the double bottom, potential double bottom. So NASDAQ is giving me some of the clearest signals right now. But even on a rally today, it doesn't do anything. I'm watching this key low area of about 10,750 for potential start breakdown. It needs to get above 11,000 for me to get interesting. Everything else would just be a scalpy day trade. So let's just peek in at Tesla real quick. I want to see where it's pre-market. So it's bouncing. It was trading down to 100 earlier, but that 100 is going to be a key, very key. Lots of resting orders, lots of morons just trying to buy a round number. You don't buy a round number. Oh, look, I can buy more Tesla because it's at 100. And that doesn't mean anything. Now, if we get the rally into the open, you could get at least a partial to full gap fill. I would use the gap harmonics for the longer term people. Based off where this is opening, there's no more potential double bottom. Never even came close to triggering. Next levels, I'm 100 because of the round number friggin' moron principle. And I call it the moron principle because you don't just buy at 50 or 100 or 200 or whatever because it's a round number. That's not a trade plan. That's just, I like to buy a round number or sell a round number. So, and I'm not just saying amateurs, a lot of street people do it too. Well, I'm going to buy at 100. Why? Because it's 100. So I'm watching 100 because there'll be some just natural market support there. We break below there. 96.91 is the next minor target. 85.57 is the next major target. Dow still caught in the range. Still, this is not a double anymore, but still using the targets if we close above this key high of 33,663. We break down below yesterday's low area, 32,900. I'm going to start targeting the 200, 32,400. Russell still caught in the range, needs to get above 1797 to 1800 to do anything bullish. Needs to minor bullish is a break below 1760. Major bullish is a break below. Minor bearish is a break below 1760. Major bearish is a break below 1730. By the way, I saw this stuff with individual stocks. I will have to try to do anything after the close today. Sorry I got cut off with Netflix yesterday. We'll revisit. Notes caught in a range, breakdown 112.20 or 112.19, breakout 113.16. Other than those are short term, it does not have a good long term pattern. Dollar index, we're getting a little pullback, but now I'm watching to see how about 104.30 to 104.20 hold on a pullback. Euro, because this is important. Pausing at the first target, so we officially got the stop reduction here. I think this market's if the dollar holds up, we could see the market roll over, and I'm talking about next week possibly, because the euro is it's officially hit the stop reduction, so the stop's officially reduced on a closing basis. The farthest away stop, because that invalidates, I always go away, the farthest away stop that would invalidate the pattern from testing would be 106.41, a close above there. Other than that, pattern's still intact. We're at I'm going to peek in at the tick. I'm still watching for the topping pattern in gold. Let's see where the tick is and how it's operating off the open. The tick, very, very bullish tick. Lots of buy orders into the open. So now it's to see, watching the pullback levels, and to see, all right, so we have a very strong bullish tick. We're pulled back in the 5 minute. I'm going to be watching on the short term to see if this 38.50 to 38.47 area holds. If that does not hold, you could see a very rapid retracement of the this little breakout bar, because it broke above these highs from Thursday's highs and Friday's highs. So this is key. If this does break, you could see a rapid retracement of that. If this does hold, I will watch back up around this 38.75 to 38.84, a potential topping area. That's now my game plan going into the open. The VIX, as Sterling pointed out a long time ago, is back below 22, but it doesn't really matter. There is still a potential double bottom, but there's nothing new with the VIX. Look how much consolidation has taken place in this area. No new info. Sorry I didn't get to everything today. I did not know Bob was going to come on, but it's a good advice. I'm glad Bob did. So, again, tick holdings. Still watch what happens when it starts getting below 1,000. Let's just peek at your spiders and the Qs. What did I do? Spoo? I want SPY. I don't know why I don't put those in my list. I just, for some reason, like to type them in. Your key resistance on the spider is 383.70 initially, then about 385, and then 386.25 area. Can't get, it would just be minor trades above there. Watch if we break below the low print from today. So far, 381.83 would be, I'd be using the gap harmonics, but I'd be really focused on, without the gap, putting up the gap harmonics, it'd be 380.76, then the breakdown to the gap fill, because we'd be getting a significant intraday reversal. And there's major support down here at that gap fill area between the full gap fill to 379.37 to about 378.75 area. You see all this buying pressure just below there. The Qs. On a rally, keep watching the high from Thursday the 5th. The high from Thursday the 5th. Yesterday. 264.20 area. We're testing it right now. We break above there. I would focus on this open price of the last bar prior to the last 1 hour bar prior to the breakdown area of about, that would be about 264.80, and then the potential gap fill. The potential gap fill to 265.74. Remember, this is traveling back into the daily rotation zone. There is a lot of overhead resistance. And before anybody asks me, yes, on the Qs, you do have a potential valid double. All right? So that's the only thing that gets me bullish in tech and the Qs and or the futures. You have two doubles, but they're a long way off from triggering. I wonder how many people are still here. So, let me just check back in. See, again, on this route, we're still, I mean, we eked out a little lower low, but we're still below the three highs from Tuesday, Wednesday, Thursday. There is a lot of selling pressure still above this. This has to burn through. So it looks like we're getting a rotation up. So now my new area to watch for the breakdown is 38.53. With that, I got to jump now to deal with some stuff into the open, but just pay attention. Don't get suckered in. This is a 4-hour chart. You know, don't get suckered into long term because you could get some rug pulls still up here. All right? Because you see here, selling pressure, selling pressure. You do a little candlestick math. This turns into a tail between these two candles. Selling pressure, selling pressure. You do candlestick math right in here, selling pressure. So you're just even getting above this 38.78, 38.80 level. You're just entering a major sell zone. So I flip through your time frames. And is this a valid double? Yes, it is. It could be invalidated before ever triggered, but it is. That's a short term. All right. So, you're welcome, Charles. All right. Thank you, everyone, for tuning in. Again, live stream this afternoon might be slightly delayed. I will jump on, but the podcast is scheduled to record between 2 and 3 or 2:30 and what is it? I don't even remember. But I might be a few minutes late. I'll talk to everyone after the close, and we can look at a couple stocks, including Netflix. Bye for now.